Welcome to the Keiser Report. I'm Max Keiser. You know, General MacArthur once said, Americans never quit. That was when there was something worth fighting for, before fraud was the only way of life, post-gold standard abandonment and bankruptcy, before the population grew morbidly obese, downing bargain cans of processed food bought at the company store Walmart, where their food stamps went the furthest, and before the airwaves were filled with patriotic scoundrels demanding perpetual war, which can never be funded by a low-wage, high food stamp economy. Now those Americans who can are abandoning ship like never before.
Yes, Max, we've heard repeatedly of these Americans who are fleeing America, renouncing citizenship, but also corporations now. American corporations are fleeing at the fastest rate ever. The rush of firms fleeing America for tax reasons is set to continue. America is a land of immigrants, but some of the biggest companies are keen to emigrate, driven abroad by high tax rates and America's worldwide system of taxation, which grabs a share of their corporate profits. The preferred method of exit is the tax inversion, which uses a cross-border merger, generally one that also has some sort of industrial logic as a pretext for incorporating in a more tax-friendly place. The biggest firms to do this are healthcare and energy firms.
Right. Some kind of commercial logic attached to it. They try to cloak what is obviously a tax dodge under some kind of commercial logic. Of course, there was two major drug companies here in the UK involved, US, UK, involved recently.
That's Pfizer and AstraZeneca, yeah.
Pfizer, the male impotence drug manufacturer, erectile dysfunction, that's it.
Yeah.
And AstraZeneca.
Yes.
Who was the suitor?
Yes.
Who was the recipient?
Well, obviously Pfizer is an American corporation. AstraZeneca is a British corporation. So Pfizer's was seeking to reduce their...
So AstraZeneca was like the queen,
yeah,
and Pfizer was like the man. So they've got the erectile dysfunction drug going after the queen. And they're running around Buckhouse, and the Queen's saying, no, put that thing back in your trousers. We're not going to allow this tax avoidance merger. Although I don't know why she would be against it. Didn't she just plop £4 million into the coffers of her little child and bride's acquisition of some estate near Buckhouse? You think she'd be all for this horrible concatenation of fraud?
Well, the British are very much for it. They desperately want it. They really want this American money. The problem is the United States, the Congress, the Senate, the President are trying to stop these deals because these guys are fleeing the 35% tax deal. Now, of course, the likes of Goldman Sachs and GE, they could set up shell companies easily to hide cash and their derivatives and their contracts like that. But it's these companies like energy and Pfizer's and pharmaceuticals, which sell real goods to overseas a lot. That's where most of their profits are coming from, but they can't send it back into America without incurring a 35% tax rate, which is, you know, the barrier to entry. They're the ones that created this high tax rate in America on corporate taxes in order to prevent any competition from emerging. But over in the UK, it's only like 19%, and in Ireland, another preferred location for these deals is 15%.
Right, well, it's the same situation with Apple Computer. They have $140 billion in cash from selling their products overseas, but they don't want to repatriate that cash. They don't want to bring that cash into America. They don't want to pay the taxes on the money that they made, on the profits that they've made. So this is a tax dodge deal, the inversion deal, where you've got a merger of these huge corporations purely to create a tax dodge. So my point is that when they say that there's a commercial justification, a veil of commercial justification, that's false. There is no commercial justification for this. By reducing competition in the drug industry, it doesn't help the drug industry. It's commercially a big sour note. It's not a commercial choice. It's purely a tax dodge.
Yes, it's purely a tax dodge. There's no other reason for it. They also look at a deal in particular that's going on at the moment. Medtronic, an American firm, is trying to merge with an Irish firm called Covidien. and in order to reduce their tax burden. And they said that Mediotronic has borrowed heavily at home rather than repatriate foreign earnings and trigger extra tax payments to finance share buybacks and dividends. With this deal, it can use its foreign cash both to reduce its debt and to finance the acquisition itself, engaging in, quote, hopscotch transactions that funnel cash from non-American subsidiaries to the Irish holding company, missing out the American layers. So they want to avoid all the American layers, but you know, the thing is, you look at these sort of companies that get to do this, whereby they're also using the might of the American military to extract the likes of TTIP and TPP, all these trade deals which benefit them. They don't want to pay the taxes for the military that forces all these countries to sign these deals. It's the chump that is on food stamps going to Walmart is the one cheering on the scoundrels on Fox News and their patriotism and saying, yes, let's do all these deals, but they don't want to actually pay the taxes to pay for all of that facade.
Right. Well, a joke was made recently in the political circles in America, some politicians saying that he wasn't aware that Apple was an Irish company, but their headquarters is in Ireland for this same tax dodge reason. So they have slave labor in China, they pay taxes in Ireland, they get underwritten by the copyright cartel in America, backed up by the American Pentagon. That's globalization. And if you're on the right side of the apartheid wall of globalization, interest rate apartheid, then you get unlimited funds, unlimited profits with zero risk. If you're on the other side, you get abused and bombed and droned. And this is the American system. And people, as you point out in your headline, are not only working for corporations that are outsourcing their tax liabilities to low-tax regimes. But Americans themselves are expatriating. They're leaving. They're abandoning their passports in record numbers. They're trying to get out of the hell that exists between Canada and Mexico before that just it blows up in a ball of flames and Big Macs.
No, I might also add that two of the top locations are Ireland, but also the United Kingdom. And how many times have you heard American corporations shriek on the likes of Fox News saying that if America raises their minimum wage, we're going to have to abandon this country? Well, the American minimum wage is $7.25 an hour. What is the minimum wage here? Well, it's the equivalent of $10.31 an hour. So 50% more, yet they're still coming here. So what's that about?
Well, it's a victimizing and scapegoating people who work for a living. If you are somebody who works for a wage, you're considered a terrorist now in America. And that's who the terrorists are, people who work, because you don't need their tax money anymore, because you can just print money. So the $3 trillion that was collected by the government last year in America is a peanut-sized amount of money compared to the $400 to $500 trillion that was simply printed by the global banking system to bail out zombie banks. So you don't need people to pay taxes, just like in Saudi Arabia. They don't need people to pay tax in Saudi Arabia. They just pump more oil and sell it on global markets. The Federal Reserve Bank just pumps more cash, and they use it for trade on the world market in ways that benefit a very, very, very small minority of people in the United States. They don't need your jobs. They don't need your tax. And if the message from Barack Obama to his population is, do us all a favor and kill yourself.
You also talk about printing money. Now, we talked recently about the fact that $29 trillion of stock market equities are owned by central banks now. And apparently the biggest buyer of them is China. Now, Ellen Brown looked at this, and this is an interesting take on what is going on in the global markets right now. Buying up the planet, out of control central banks on a corporate buying spree. So central banks have the power to create national currencies with accounting entries, and they are traditionally very secretive. We are not allowed to peer into their books. It took a major lawsuit by Reuters and a congressional investigation to get the Fed to reveal the $16+ trillion in loans it made to bail out giant banks and corporations after 2008. But she asks, what is to stop a foreign bank from simply printing its own currency and then trading it on the currency markets for dollars to be invested in the U.S. stock market or U.S. real estate market or the U.K. real estate market, as we always point out right behind us, all these properties being bought by China. And she's reckoning this is what's going on. They're playing America at their own game, but much cleverer. They're doing a better game of chess here. They're just printing up money and buying up all the assets over here in the same way.
Right, so China becomes a global version of Carl Icahn. The corporate raider. So it's a hostile raid of American assets. They're a bear hug, as it says, And there's a famous saying in China, no tiki, no shirty. which anyone who's ever lived in New York and taken their clothes to a dry cleaner's know this famous phrase, no ticky, no shirty. So what China is doing is they are flooding the world with tickies, receipts or claims or phantom money, fiat money. And in exchange, they're taking all the shirties. So it's we own all the tickies, we own all the shirties, drop dead, round eye.
Well, the other thing I was suspecting, I came up with this idea that, you know, we've seen that the likes of Qingdao, the giant port city in China, has shut down the port because they can't find out who actually owns the aluminium or copper. And I reckon that all of these properties here are being bought using the same collateral of that aluminum or copper there, because, you know, in China they clamp down on using your property as leverage. So instead people went to metals. So people were buying up, they claim they were buying up aluminum and copper, but I reckon it's the same exact, there's just 1 ton of aluminum, just 1 ton backing as the collateral for all of these properties that was bought in cash. And of course, when they're buying these £1 million, £2 million properties or £10 million properties, they get a passport with it. So they're like, these guys are, again, clever, genius, playing it at their own fraud games here.
Well, that's the issue of rehypothecation.
Yeah.
And we talk about in London that they can sell the same bond an infinite number of times to float this Ponzi scheme, George Osborne's debt Ponzi scheme. And of course, the UK is now the most indebted of the industrialized countries in the world, 10 times GDP to debt. So the Chinese are using the same rehypothecation fraud, but not with a paper asset like a bond. They're using a warehouse full of aluminum that doesn't exist except for a couple of crickets bonking in the corner. There is no aluminum in the warehouse. In that case, it's all tickies, no shirty.
Yeah, and it's like a counterfeit rehypothecation. They're famous for counterfeiting, you know, the American goods or French luxury goods or Italian luxury goods. And this is like counterfeiting their fraud in order to actually get real assets over here, which is, I think, pretty remarkable.
Right, so the buildings here in London that are being bought by Chinese are being paid for by money that's been collateralized by a warehouse full of cricket droppings.
Yeah.
Well, and of course now the real estate market is imploding in China, so they're going to get a massive margin call, People's Bank of China, massive margin call. And to pay that margin call, they're going to call up, let's say, Fannie Mae or Freddie Mac or the S&P 500 and say, we'd like you to send over the state of Iowa, please, to meet our margin call on our imploding real estate market, or send over the state of California. And Barack Obama will be like, ching, fing, fong, jong, zing, fang, boom, which means no ticky, no shirty. All right, well, we got to go. Stacey, thanks so much.
Thank you, Max.
Stay tuned for the second half, a whole lot more. Welcome back to the Keiser Report. I'm Max Keiser. Time now to turn to Ronnie Moas of StandpointResearch.com and now philanthropyandphilosophy.com. Ronnie, welcome in person to the Keiser Report.
Thank you for having me.
All right, this is a fantastic opportunity for us. We have a lot to talk about. The first thing I want to mention, though, is as a stock analyst, you've been shooting the lights out. Since 2008, you've had over 400 stock picks, and they're beating the S&P by 500 basis points, and you're beating your peer group in many cases by 20%. So you are a gifted stock picker, and you're absolutely number one as a stock picker, and as a result, you are enabling lots of money to be made. But now you're taking it. You're trying to change gears, or you want to do something with that money. You've got to. What exactly? How do we describe this? Because you're a gifted stock picker. Usually that's enough, but in your case, there's got to be something more. Talk about it.
Yeah. Well, what happened is there was such a focus on Wall Street on how much money these companies are making, and nobody ever asked how they were making the money. And in the last year, I started really analyzing what these companies actually do to turn a profit, and I just got sick to my stomach. I blacklisted Apple and Amazon and Starbucks and Walmart and Yahoo and Philip Morris and CVS, and each story was more nauseating than the next one. And I've been in more than 50 countries on 6 different continents. This is my last stop right now on a 50,000 kilometer trip that I did during the last 4 weeks, 8 different countries. And a lot of what I see in America, I do not see in other countries that I'm traveling to. You can blacklist the mining companies, you can blacklist the consumer staples companies, you can blacklist the consumer discretionary companies. I'm really having trouble right now finding a company and an industry that is clean.
Okay, you have clients, money, people, pension funds, et cetera. They're buying your research, and they manage money. And so what's been the response of the client base?
I think they're a little bit uneasy. Nobody on Wall Street has ever spoken the way I'm speaking. I am hell-bent on cutting the gap between rich and poor worldwide. And I'm using a different approach. Speaking nicely to the people at the top has gotten the poor and those speaking on their behalf absolutely nowhere for centuries. And I'm deciding to take a different approach, which is humiliating the upper class, telling them exactly what I think about them, and educating the public as to what is really going on right now. You take Starbucks, for example, the market cap is $55 billion. Most of that money is in the pockets of wealthy multimillionaire and billionaire shareholders, $55 billion. And the bean pickers in the coffee fields are getting $4 a day. The situation with Amazon, Walmart, Apple is just as bad, if not worse. I don't even want to go into what Philip Morris is doing in order to turn their profit every quarter.
Okay, now this is what you're talking about. It's not, obviously it's not new. There's a whole movement called corporate social responsibility that's been out and about for many years, and it's growing in importance, and there are funds dedicated to corporate social responsibility. And then you always hear the riposte that, Milton Friedman said that the only responsibility for a company is to make money. It's not to be quote unquote good. And there's the dynamic. So how are you different than, let's say, a corporate social responsibility effort?
First of all, I don't really look that closely at what other socially responsible organizations are doing. I'm doing my own thing. As far as Milton Friedman goes, I've heard all of the arguments from the right, and none of them make sense to me. This trickle-down theory and the free markets theory, I think it's just a lot of hogwash and excuses on how they can justify what they have. And there is no just way to justify what they have. From what I've seen in my travels around the world, the people working the hardest and adding the most value to society are the ones living below the poverty line. And we just have the whole pay scale here twisted, and it needs to be adjusted. I'm not a communist, I'm not a socialist, but I think that the pie is not being split up fairly. When we take from the poor and give to the rich, that's fine with the upper class. The minute I talk about having a more fair distribution, I'm a communist and a Marxist. I just want people to be treated fairly. Nobody working 40 hours a week should be anywhere near a poverty line, and I don't care what country they're living in. We could wipe out poverty very, very easily, not just in the United States, but in the other Western countries and around the world, if people would just spend money on what they need, be a little bit more philanthropic, and just have red lines in the sand that they're drawing with regards to what level they're willing to stoop to in order to turn an extra dollar of profit for shareholders that in many cases don't even need the extra money.
Let's talk about this in terms of being purely on a stock picking side, because this is how you approach this. You're looking at it as an analyst, and obviously the best analyst on Wall Street right now. You're number one. If you look at your track record since 2008, you are, again, to use an oft-used phrase, shooting the lights out on the analytical side of the business. When you talk about a Starbucks or you talk about a cigarette company, I mean, the term that an analyst uses is risk. These companies are, you're identifying risks to society, potentially risks to these companies, to their balance sheets. So that risk has a dollar of value to it, doesn't it? So doesn't your report, if you come out with a report on Starbucks, stock's 52 billion market cap, and I don't know what the stock price is currently, but what you're saying is that there is X dollars per share of unrealized social dissent risk. Is that correct?
Yes, the problem is it's going to take many years before that is realized. In other words, if you want to short these companies because there might be some social backlash now that we have, up until 20, 30 years ago, the poor people had no voice. Now they have a voice. And it's through people like myself and through their own personal use of the internet. And, in theory, you could say, okay, I'm going to short these companies because I think eventually the public is going to turn against them.
Well, you know where I'm heading with this.
Yeah.
Because we've talked about it a little bit. We've on this show, we've talked about this for a number of years, and I've had a campaign here in the UK with both Zach Goldsmith and Ben Goldsmith about monetizing the dissent and getting people involved. In other words, if Starbucks is this company that has this unrealized social dissent on its books, can't the public, by simply pointing that out, and you do mention boycotts as well on your website, if they were to boycott a Starbucks with the goal of knocking X number of revenues off the top line, and therefore the stock price would get hit.
Right.
So isn't that a good way to marry the social networking that you just talked about, people are now aware of what's going on, with your work as an analyst, and then capturing that, let's say, to take it a step further, capturing that realized dissent risk with a short sale. So is that not a good idea? I mean, but my question is, can't you get the public involved and involved in a way that they're not putting up any money? They're putting up a boycott, which is a free, a riskless and cheap way and no-cost way to fight back.
I will spend the rest of my life driving traffic to this new website in the hopes I can get people to start being more discriminating in who they spend their money with. The problem is I can't get my message to the masses so easily because the large networks in America, if it's ABC, CBS, NBC, will not let me speak the way I'm speaking to you because I'm attacking their corporate sponsors that are paying for the advertising time on their network.
Okay, let me jump in here with my response to what you've just said, because as I've just said, we've been active trying to push a campaign like this for years. And when I went to the hedge fund community, they said, great, show us a short sale because you're going to deliver some top line revenue depletion with a huge boycott. Maybe it's Coca-Cola, maybe it's Starbucks. But when I went to the activists, like Greenpeace and others, they said, we don't want anything to do with this because if we associate ourselves with Wall Street in any way and with finance in any way, the average donator, the $5 that we rely on, will be turned off, and it'll kill our fundraising efforts.
Even if they go against Wall Street.
If they mention that they're using some kind of hedge fund or short sale to attack a company that's doing wrong, the perception from their supporters would be that they've somehow flipped sides and joined the bad guy. So how do you fight that illiteracy, financial illiteracy?
Well, you mentioned in my previous interview with you, maybe there's a way to get around that by saying that the money you make in the hedge fund will go to the people that are being undervalued, underappreciated, and underpaid by society.
Exactly. So if, let's say, who's the biggest victim? Okay, Starbucks, you've got victims in the third world who don't get the benefit of the trademark on those coffee beans and the other aspects, the intellectual property of the coffee beans. They don't get they're not selling the finished product of the coffee beans. They're getting hugely undervalued for their coffee beans. So let's say there's a group in that area, maybe it's Brazil or somewhere else, and this fund, if you marry the boycott with a short sale, and the idea is if you capture a gain, we're going to channel it to that group. Isn't that using capitalism in a way that, in a Wall Street friendly way, to reverse the flow of abuse?
It would be unbelievable, but the people that are giving you the money to run the hedge fund are going to have to forfeit profits. So
not necessarily, because they're making money on the short sale, and it's a competitive trade. In other words, they are now introducing this type of arrangement, a trade that is non-correlating with anything else.
So you wouldn't be giving all the profits to the people that are being undervalued that we're talking about. You would be splitting it up between them and the people that put the money into the hedge fund. It's a fantastic idea, but we need to get this out to the masses, and that's what I'm working on now.
You've got the chops on Wall Street. You're the stock picker extraordinaire. You're not just some guy who has a mild interest in stocks. You are the Babe Ruth of stock pickers, at the moment. I mean, that changes every decade. There's someone rises up and it's like, God, this guy has got the hottest hand in the world, and you are that guy. So, again, I should, drop these names. Ben Goldsmith, Zach Goldsmith. These are children of billionaire Jimmy Goldsmith, who made his bones on Wall Street doing this type of thing. So putting this all together, it could potentially create this, what we call it, the Karma Bank hedge fund, and channeling money, grabbing those short sales, splitting it with the investors, and as you point, would something like that, your site, Philanthropy and Philosophy, does it fit in with the ethos of that?
Absolutely. What I'm trying to do is I'm still in the stock market because I love what I do. I love the competition and being able to outsmart and outperform all of these firms that rejected my resume 20 years ago. And what I'm doing is with the money that I'm helping people make with Standpoint Research, I'm telling them where I would like to see some of that money go. And that's why on the new website, philanthropyandphilosophy.com, I'm giving them the names of 24 of the most highly regarded, highly efficient, highly transparent, and honest charities in the world. And you have all the options there, whether it's animal shelters to cancer research, education, hunger in Africa, and everything in between.
But admittedly, that's a bit of a passive approach because you're suggesting that they make that donation as opposed to tapping into those animal spirits and saying, grab these short sales. But kind of out of time, actually, but can you stay for another segment?
Absolutely.
Okay, that's great. So stay for another segment, and that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacy Herbert. I'd like to thank our guest, Ronnie Moas of philanthropyandphilosophy.com. If you'd like to get in touch, tweet us at Keiser Report. Until next time, bye, y'all.